So to get this party started again with a lot of energy, we are going to roll right into the first keynote speech, the use of blockchain technology for the digitalization of business models. We've got Konstantin, crypto assurance leader and financial service partner of PwC, and Billy, the senior manager of partnerships at Stellar. Love to welcome to the stage. Please give them a round of applause.
Does this work? Yeah, you hear me now. Hello and welcome. I hope everybody feels well after the party yesterday. I heard it was until 1 a.m., so it was a big party. So today, as you see, we have two people, maybe Web 2 and Web 3. So we are going to talk about this work together, how we work together, and how we serve from PwC side our clients, and how Stellar supports us there. We are going to talk about how we can digitalize business models with blockchain, and give you a couple of examples and show you a little bit our approach. So my name is Konstantin. I'm a partner at PwC in the financial services practice. I have a lot of traditional clients, of course, but more and more they're coming now Web 3 clients, where we serve them, help them getting more compliant, getting understanding how compliance works, how digitalization in the compliance sector works, and how you have to work with corporates. Because it's like we had yesterday a panel and we discussed that there are two different worlds coming together, and there need to be some kind of translation in between there. I usually have right now a lot of banks as clients, where we help them really adopt and offer cryptocurrencies to their customers. And in Germany, we have a good regulation and can work with that very well. And with MiCA now, I think we are going into the right direction for the EU. But also we have a lot of industrial clients who just want to digitalize their businesses, and we help them there. But that's from my side. Maybe Billy, you introduce yourself as well.
Hi everyone, Billy Grenis from the Stellar Development Foundation. We're the nonprofit organization that supports the Stellar network. Some of you may be familiar with Stellar. It's been around since 2014, pre-Ethereum. And from the very beginning, it was focused on the digitization of real world assets. So stable coins before that term really even existed. And for the whole kind of duration of its existence, the focus has been working with traditional financial institutions. So not trying to displace them, but to partner with them. And so it makes sense, that now we're working very closely with PwC as well to help their clients join in the digitalization process.
So just to start a little bit with a market overview. Right now, not a lot of companies have blockchain implemented, but a lot of companies are very interested in implementing something with blockchain. So we have a study here, 54% of the companies are really interested in doing something in this sector. So traditional companies are really interested, but 5% really have implemented something. So there is a need to fulfill it. So, and they understand that it's of course a very, very interesting market. And of course, digitalization is very important. There is not only blockchain out there for digitalization, but I think it's a huge game changer to decentralize specific processes in companies, but also really be more understand the technology and use the technology and use the benefits and implement new cases. And from my feeling with my clients, I'm talking to, they more and more understand it and look forward to work with you. From a predictive growth in a market, it's crazy. 2023 we were at 17 billion, and we are going 2030 to 943 billion. So it's crazy growth. So a lot of potential there. We did like a survey and to understand a little bit the challenges out there. Of course, it's very hard to find qualified personnel, especially in the traditional economy, because most of the Web 3 native people want to work at the Web 3 company and don't want to work at the Web 2. So they have a huge lack there of knowledge. and of personnel. Legal uncertainty is there, but it's getting better because we have new regulations in the market, and we see a lot more in the tokenization, in the payment sector, regulated, and companies start working with that more and more. And of course, it's very important to identify use cases which are really relevant and help the companies. We don't just want to take blockchain and work, say, well, I want to work with blockchain because it's blockchain. So we need to find scalable, reasonable, sustainable use cases and to implement blockchain. And that's still a very hard thing because a lot of companies just say, well, I want to work with blockchain, and just to do it like a marketing activation and to say that I'm working on blockchain, but the use case is not really relevant. We need a long-term strategy there.
Awesome. Yeah, so when we think about digitalization at Stellar Development Foundation, we think of tokenization. And so talk about some of the benefits, and then we'll get into some of the use cases that actually do make sense and have helped various companies. So first benefit that we think about is efficiency. The idea that you can eliminate intermediaries, speed up settlement time. I think it's BCG thinks or predicts that there's going to be $20 billion of savings, cost savings from this increased efficiency in the next few years. Also, tokenization increases accessibility. So all of a sudden now you have assets that can be opened up to a broader audience, a more global audience. You have 24/7 availability of these assets, and you have fractionalization of assets, meaning that people can now hold assets that they once were unable to, such as a large real estate purchase or expensive piece of art. Now they can hold a fraction of that. And then finally, tokenization opens up new use cases and utilities. So you could think about now you can use assets, non-currency assets, as payment mechanisms. Also, you can have instead of a dollar or a euro that you're not earning interest on, you can actually have a digital asset that can be used for payments that is collecting interest at the same time. So now we'll look into some real world use cases, as I said, that will actually tie into some of these benefits. The first one is Vonovia, which is a real estate company nearby in Germany, and they issued a 20 million euro bond on a public blockchain with the whole idea of launching quickly, getting out to as many people as possible at the lowest cost. And so they were able to move very quickly and much faster than they have been from previous bond issuances, simply by issuing on a public blockchain. Next, we have Franklin Templeton, who has launched the first US registered publicly available treasury fund on a public blockchain. And so what does this mean? Franklin Templeton is actually using a public blockchain for the tracking of the transfer of assets and the holdings of these assets. And so while for Franklin Templeton, this offers a number of cost savings, it actually opens up new opportunities for the asset holders themselves. Number one, it reduces the minimum buy-in cost, so you can have only a few dollars of this fund. Additionally, interest on this asset is paid daily, and so they're actually able to airdrop the interest payments every single day directly to your account. And then finally, the asset is, it's called Benji, it's pegged to $1. So the idea is now I can actually send $1 to Konstantin, and as I mentioned earlier, that dollar's earning 5% interest while I'm holding it. And the last example we have today is in disbursement. So UNHCR, the UN agency for refugees, has launched a number of, has issued or distributed millions of dollars on public blockchain using specifically USDC, the digital dollar. And what they're able to do is actually, from a list of displaced peoples or refugees they have phone numbers of, they're able to send USDC directly to their mobile device and wallet. And this is obviously beneficial because money gets in the hands of the people who need it most, but also the agency is able to trace and track exactly where their funds are going. And you could think of this too, disbursements beyond just aid, but imagine that you're a company, you have gig workers in another region where you don't have banking rails, or it's not an easy place to set up financial accounts. You're able to use stable coins and digital assets to pay your workers in other regions. And the beauty of all of these use cases is they're built on Stellar. Stellar is where the blockchain meets the real world. Now, to have a blockchain that is usable for real world use cases, you need to be fast, low cost, scalable. But those are just table stakes. And with the Stellar network and at the foundation, we're working specifically on interoperability. And interoperability doesn't mean just Stellar with Ethereum, but it also means Stellar with the traditional financial system. Of course, with that comes compliance. You're working with these financial institutions, you need to be able to have KYC tools and asset control. So Stellar has compliance tools built in. It has the ability, if you issue an asset, to whitelist, determine who can hold that asset, to claw back funds. You can do all of these things in the setup of the asset that you are tokenizing. Recently added smart contracts, so Stellar can do everything you can do on Ethereum, plus all these other great features I just mentioned. And then finally, the big thing I want to drive home about Stellar is this global ecosystem of on and off ramps. So Stellar has one of the largest ecosystems of on and off ramps, meaning the ability to go in and out of digital assets and fiat. One of the big partnerships we have is with MoneyGram. So any MoneyGram location around the globe, you can send USDC on Stellar and receive local cash, or you can withdraw cash or deposit cash and receive USDC into your wallet. Now, I work for SDF, the foundation that shepherds the network, and we're here to support you in your blockchain tokenization needs and digitalization, and of course, we work very closely with PwC to do this.
Yeah, now, well, we saw the use cases. I want to show you more at a high level approach here, how we do these projects and what is important in these projects. So you see here, of course, what I said at the beginning. So you have to define the business case, and it has to be a sustainable business case and a reasonable business case. Of course, that's for every new idea, it is given that you have to do that. But, well, with this hype, everybody wants to do something, and they sometimes lose the side of where they have to focus on. So as soon as the business case, and there we help a lot with our clients, what could be a use case? What could be a business case? And is it a case which is worth it, really calculating it through, and will help the company be more efficient, or deliver new products to their clients, or have other benefits? Second step, we usually build without blockchain, like a proof of concept, so we can discuss it in the board, so they get a feeling what the blockchain, what kind of benefits the blockchain will bring with it, because usually the issue is that not everybody in the company understands what the blockchain is, how it works, and what the benefits are. Because it has a little bit like a touch where, well, I don't know it, I don't want to interact with it, there were a lot of scams, I'm afraid of it. So there has to be a lot of awareness in the company. So we do that, and we really then discuss how the blockchain architecture could look like, what kind of chains would be beneficial for that use case. So basically an analysis over the whole market. And then it's very important to find the right partners. So what chain are we going to use? What kind of development partners you have for that project? When I'm tokenizing something, do I have somebody who is licensed? Do I have a custodian for that for afterwards? Do I have a crypto register who can basically register my security if I need that? So there are a lot of players during that process. It's not like I'm going there and putting an AI in there and I'm done. So there are a lot of players and it's a very complex project. And the client has to understand that, and we have to work on that together. Then I think the most important part here is integration into the current systems and processes. Because if it's something standalone, they will use it at the beginning because it's nice, and then they will stop using it because you have breaks between the technologies, and it won't help. And then at the end, of course, monitor the performance, monitor the business case. Did the calculation we did it upfront really works through? Is it good enough, or do we have to adjust? Do we have to find new ways of making this a successful case, or is it not a successful case and we have to break it and do it differently or do something different? So I think this is a very high-level process. I just wanted to share that with you. We usually go through that process with our clients, so they get a high-level overview, and then step by step help them implement these different processes. So what is important? So Billy and me sat down and thought a little bit about what is crucial for our projects usually. And the first thing, of course, we need a clear business objective. Why are we doing this, and what's the benefit? We need a technical feasibility because it's not always working with blockchain. Maybe another technology is better for that case. So we need to analyze it. It's not like the secret sauce for everything. Then we need a really good collaboration partnership network. And it's very important to find the right chain for specific use cases. And we have that discussion a lot with Billy, because sometimes he says, well, this use case is not the right for Stellar. You have to use another chain. But when we find a case which is relevant for Stellar, we build it on Stellar. I think that is very important to understand, that there is no one-size-fits-all. Then a very important thing, we should look at the regulation and the frameworks are out there. How do I implement that? Having a sustainable outcome at the end, because if I build it without looking at the risk and the regulatory framework, then yeah, I will have a use case, but I cannot use it. And that's what I said at the beginning, long-term strategy, adaptability and scalability of your case. What is going to happen in 2-3 years? How can I make this a bigger thing? How can I make this more relevant for the company? And what is my strategy? It is not like robotics, like RPA, where you say, it's a tactical solution, I just want to use it for a year. It's a long-term strategy, and we need to implement that, otherwise it's going to die long-term. So it's very important to understand how I can scale this and implement it through the whole company. These are the top success factors from our side. I'm very happy to discuss that afterwards. We will be all day here. So that's from our side, and thank you very much for your morning patience with us. And
thank you.
we're looking forward to you.